Today we're going to talk about how to avoid the 2018 tax trap. I don't want you to fall into it, so stay with us. If this is your first time at our channel or you haven't subscribed, be sure to click on the link at the bottom. Maybe you've checked out the new tax brackets, maybe you haven't. Either way, the vast majority of people are going to be in a lower tax bracket, but not everybody is going to be in a lower tax bracket. There's really two pieces to this trap. First, you have to know or have to understand where your income is going to put you at the end of the year. What bracket might you be in? Because if we're going to get certain tax brackets, we might actually pay more in taxes. The other side of the trap is much easier to fall into, and probably the vast majority of people will actually fall victim to this trap. And that is the trap of making more money or having more money in your pocket. These taxes could put more money in your pocket. Like I said before, the vast majority of people are going to have more money in their pocket. But the problem with that is it's extremely easy to get used to having more money. Most people, when they earn more money, they quickly adapt to it. The more money you earn, the more your expenses will rise. So here's a big question to avoid falling into this trap. You have the opportunity to make the decision to save more for your future, to put that money into a retirement account. And if you calculate it right, it won't even affect how much money is in your pocket from last year. If everything is the same, it should be the same. The only difference, you'll be a little bit further ahead. But saving these dollars isn't simply just putting money in a traditional IRA or increasing your 401k contributions or putting it in the bank. All these three things are great ways to save, but just reducing your tax liability even further, this might not be the maximum benefit that you can get from these lower taxes. Something to think about is if I am in a lower tax bracket right now, what else can I do to maximize my retirement savings without feeling the effects of anything today? The first thing that you can do is you could put more money into a Roth IRA. The second thing that you can do is you could take your traditional IRA money, or if you have an old 401k, you could think about doing a Roth conversion. And that's taking money from your traditional IRA or that 401k and moving it over into a Roth IRA. Now, you'll pay the taxes this year, but the benefit is all that future growth that you'll have won't be taxable. When we're saving, there are really two factors that we have to take a look at. The first is how much you can save. Are you able to save $1,000, $2,000, $5,000, $10,000? On the other side, we're dealing with contribution limits. So if we wanted to contribute $10,000 to a Roth IRA, we couldn't because the limits are only $5,500 or $6,500 depending on your age. So those are the two pieces that we're dealing with. But by also looking at where your taxes are going to be, you can figure out or help yourself figure out where that balance is going to be. There are two reasons why you want to do this proactively rather than waiting until you get the huge refund at the end of the year. The first is when you've already gotten the refund, that means you already filed your taxes. The other reason that you want to do it early is because if you've made adjustments to your W-4, you're probably getting more money back in each paycheck. And let's face it, if you have a little bit more money in your pocket, you're likely to spend it. So if you're adjusting to that newfound money, then it might be a little bit more difficult to save when you really need to. Now, before I said that most people will pay less in taxes, so I wanted to show you a little bit more visually. So I'm going to put it up on the screen here. So what we can see here, this section right here in blue and this section in blue are actually the brackets that will pay more in taxes relative to 2017. A third piece that we want to take a look at are the small business owners that are going to get this pass-through tax deduction. If you're a small business owner, that you're also going to get a 20% reduction in this pass-through deduction. There's actually an income limit if you're a service business in order to qualify. If you're caught in these tax brackets where your income has increased or you're a small business owner that's service-based, then you want to take a look at how to reduce your taxes. So it's not cut and dry whether or not you should contribute to a Roth IRA or a traditional IRA. But in either instance, it's really important to make sure that you're looking at it proactively to make sure at the end of the year, you don't fall into these tax traps. So don't fall into this trap and get used to this extra money in your pocket. If you've enjoyed this video, be sure to subscribe and leave your comments down at the bottom.